Free Gold Crypto Forex Trading Signals Telegram channel. K9. Investments, gold trading. Navigating the Forex market can be both exciting and challenging. One of the most crucial skills a trader can develop is knowing when to buy or sell a currency pair. This decision can significantly impact your trading success and profitability. In this article, we'll explore various strategies, indicators, and tips to help you make informed decisions in the ever-changing Forex landscape. In Forex trading, currencies are quoted in pairs, such as EUR, USD, or GBP, JPY. The first currency in the pair is known as the base currency, while the second is the quote currency. The exchange rate indicates how much of the quote currency is needed to purchase 1 unit of the base currency. Major pairs. These are the most commonly traded currency pairs, typically involving the US dollar, USD. Examples include EUR, USD, USD, JPY, and GBP, USD. Minor pairs. These pairs consist of major currencies that do not include the USD, such as EUR, GBP, or AUD, NZD. Exotic pairs. These pairs involve one major currency and one currency from a developing economy, like USD TRY, Turkish lira, or EUR ZAR, South African rand. Economic indicators are vital in determining currency values. Key indicators to monitor include gross domestic product, GDP. A rising GDP often strengthens a currency as it indicates economic growth. Employment data. Higher employment rates can lead to increased consumer spending, boosting the currency. Inflation rates. Moderate inflation can be a sign of a healthy economy, while high inflation may devalue a currency. Political events can significantly influence currency values. Elections, government policies, and geopolitical tensions can all affect investor confidence and currency strength. Market sentiment reflects the overall mood of traders and can impact currency prices. If traders believe a currency will strengthen, they are more likely to buy it, driving up its price. Chart patterns can provide valuable insights into potential price movements. Some common patterns include head and shoulders. This pattern can indicate a reversal in trend. Double tops and bottoms. These suggest potential price reversals. Triangles. These can indicate continuation or reversal of trends. Several technical indicators can help determine the right time to buy or sell a currency pair. Moving averages. Moving averages smooth out price data to identify trends. A crossover of the short-term moving average above the long-term moving average can signal a buy opportunity. Relative Strength Index, RSI. This momentum oscillator measures the speed and change of price movements. An RSI above 70 may indicate overbought conditions, while below 30 may suggest oversold conditions. Bollinger Bands. These bands help identify volatility and overbought or oversold conditions. Prices touching the upper band may suggest a sell opportunity, while touching the lower band may indicate a buy opportunity. Keeping an eye on economic events is crucial for Forex trading. Major announcements such as interest rate decisions or employment reports can significantly impact currency prices. Use an economic calendar to stay informed about upcoming events. Central banks play a vital role in the Forex market. Their monetary policies, interest rate changes, and statements can influence currency values. For instance, if a central bank raises interest rates, it typically strengthens the currency, as higher rates attract foreign investment. Before entering the Forex market, it's essential to set clear goals. Determine your risk tolerance, investment horizon, and profit targets. This clarity will help you stay focused and make informed decisions. Effective risk management is crucial for long-term success in Forex trading. Use stop-loss orders to limit potential losses and take profit orders to secure profits. Never risk more than you can afford to lose. Before implementing a new trading strategy, consider backtesting it using historical data. This will help you evaluate its effectiveness and make necessary adjustments.